Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about YOFC interim report. YOFC Optical Fiber and Cable Joint Stock Limited Company offers a diverse range of products and services across various industries. Some of the key businesses and services provided by the company include production and sale of optical fiber performs, optical fibers and cables, integrated solutions for communication and data transmission specialty fibers and components, including optical assemblies and modules, submarine fiber optic cable systems, optical transceivers and coaxial cables, including RF and leaky coaxial cables, data center cabling solutions, ODN products, fiber distribution frames, cabinets, etc., solutions for 5G bearer networks, fixed broadband, data centers, smart applications, and home entertainment. The surge in YOFC Optical Fiber and Cable Joint Stock Limited Company, YOFC, stock price over the past year can be attributed to several key developments. The accelerating demand for hollow core fiber, crucial for AI data centers, has been a major catalyst, with YOFC stock increasing by 21.3% in August 2025 due to this trend. Additionally, the company's strong first-quarter financial performance in May 2025, which saw operating revenue increase by 21.23% year-on-year, and net profit attributable to shareholders skyrocketing by 161.91% year-on-year, also contributed to the stock price rise. YOFC's diversification strategy, new product development, commitment to AI-ready optical infrastructure, market expansion, and strategic acquisitions have all played a significant role in driving up the company's stock price. The company's focus on developing high-value-added products like multimode and air-core optical fibers, as well as its investment in emerging markets, has further contributed to its growth. While recent news indicated a decline in stock price due to a major shareholder liquidating holdings, the overall trajectory over the past year has been strongly positive. The company's strategic direction and commitment to innovation have positioned it for continued growth and success in the booming AI sector. The primary drivers of revenue growth or decline can be identified through an analysis of the key points provided. On the growth side, the optical communication products segment saw a significant increase of 19.4%, while the optical transmission components segment experienced a substantial rise of 54.6%. The overseas market also contributed to revenue growth with a 52.8% increase. The development of new optical fibers and advancements in optical fiber networks towards 3 ultras, ultra-large capacity, ultra-low latency, and ultra-low loss are key drivers of growth. Additionally, the large-scale commercialization of hollow-core optical fibers is expected to contribute to revenue growth. On the decline side, domestic customers experienced a 20% decrease in revenue, primarily due to decreased effective demand and average unit price for common single-mode optical fiber and cable products. The acquisition of YOFC Optical Fiber Material, Hubei Co., Limited, contributed to revenue growth, while the proposed acquisition of Penta Laser, Zhejiang Co., Limited, is expected to further boost revenue upon completion. Net income and profit margins experienced significant changes between 2024 and 2025. Net income saw a substantial increase, with the highest growth rate of plus 127.3% reported on page 20. This surge was driven by improved operational efficiency, increased revenue, reduced costs, and decreased non-operating expenses. Profit margins also witnessed notable improvements. The operating profit margin rose by as much as plus 90.3%, from 3.1% to 5.9%, while the gross profit margin reached a new high of 28.3%. Other product and service profit margins increased by 24.9%. The reasons behind these changes are multifaceted, but primarily stem from operational improvements and cost reductions. As the company streamlined its operations and reduced expenses, it was able to increase revenue and enhance profitability. These strategic decisions have yielded positive results, contributing to the significant growth in net income and profit margins. The company is generating a substantial amount of positive operating cash flow, as evident from the financial summaries on pages 22 and 203, which both report a net cash inflow from operating activities. Furthermore, page 305 shows a significant increase in net cash generated from operating activities compared to the previous year, indicating a strong trend of positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past period. Initially, there was a decrease in short-term and long-term debt levels, with short-term loans decreasing by RMB 7,238,641 and long-term loans increasing by RMB 295,021,784. However, the total debts increased from RMB 9,450,752,508 to RMB 9,591,861,737. In terms of interest expenses, there was an initial decrease from RMB 120,260,640 to RMB 123,899,619, followed by a net increase in interest expense from RMB 43,970,388 to RMB 36,943,766. However, total financial expenses decreased by 11% from RMB 88.17 million to RMB 77.99 million. Notably, there was an increase in interest expenses of approximately RMB 20.7 million and a change in interest expense or income impact due to interest rate changes of RMB 16,241,933. Overall, the company's debt level has increased, while interest expenses have shown mixed results with both decreases and increases reported. The company's financial performance reveals a mixed picture across different segments. On the positive side, optical communication products, optical transmission products, optical communication transmission products, and optical components segments all showed strong performances, with significant operating income or segment profit. In contrast, research and development expenses and general and administration expenses segments underperformed, incurring substantial financial expenses. These results indicate that while certain areas of the business are thriving, others require improvement to optimize overall performance. For management's outlook on company strategy, the company's management has provided insights into its outlook and strategy through various statements. Notably, they have adopted a conservative approach to funding and treasury policy, aiming to maintain an optimal financial position while minimizing risks, page 307. This cautious stance is reflected in the company's long-term holdings in strategic companies, page 154, and its recognition of losses from joint ventures up to the extent of its net investment, page 78. In terms of market trends, management expects the domestic telecommunications market to operate steadily, with a slowdown in China's information and communication network construction intensity, page 311. However, they also anticipate opportunities for growth in overseas markets despite complicated macroeconomic situations. The company is positioning itself to capitalize on these opportunities while managing risks. Overall, management strategy appears to be focused on maintaining financial stability, diversifying investments, and adapting to changing market conditions. The company has a history of paying dividends, with confirmed payments in 2024 and 2025. However, there is no clear indication of share buybacks, with one mention being potentially an error due to conflicting information. Concerns about inventory buildup or supply chain disruption exist. The company's financial summary highlights concerns regarding inventory buildup and supply chain disruption. The data shows a significant increase in raw materials and spare parts inventory, as well as finished goods in stock, totaling RMB 64,365,573 over the period. Furthermore, the explicit mention of inventory buildup, yes, on page 69 underscores these concerns, suggesting that the company is struggling to manage its inventory levels effectively. That concludes the financial summary for YOFC. Feel free to comment below, and I will be happy to answer them when possible.